Three, two, one. And good morning and welcome everyone. This is your War Room 1985. And today with me is Larry Apka, directly from Edinburgh. How's it going, Larry?
It's all good in the hood, my friend. Another beautiful day here in this sunny Scotland. I say sunny every time. It's not, but we're good over here.
All right. Let's show people that we are real people. Yeah, it's all right. Let me bring you in. Let's see, that's Larry. Let me just take this one out for a second. And
oh, he's getting slick with the technology. Look,
yeah, I mean, it's just crazy. Wait. Let me see how we can go side by side. Where's this thing? Okay, wait.
Oh, it's coming. It's coming.
It's crazy, man. I don't know how to bring you side by side.
You literally just have it. Come on.
No, we had it. No, we had it side by side. I don't know now how to have it. That's you.
That's me.
That's me. That's both of us.
Good effort, mate. Good effort.
All right. So good morning, everyone. Again, JR directly from Zagreb in Croatia. Right there in front of you, that beautiful man, that's Larry Apka in Edinburgh. And today, as every Thursday, Tuesdays and Thursday, we're going to talk about the markets. We're going to start with H4, our own methodology for you to trade Forex as a business. Now, we know everything that is happening out there. The question is, what is the solution? Okay, what kind of solution are you going to bring to the table? So the team at Trade with JR, we think we have one. That's all you need, one solution.
We know.
Exactly, right? And that will be trade Forex as a business, not trade Forex to become a trader. We don't want you to become another JR. That's fine. We have one. That's all we need now. What we want you is to have an opportunity to approach the markets, understanding the core, the basics. You don't have to become an economist. We want you to understand the basics, and that's good enough for you to be in a position to pull out of the market. What we aim every week, it's 500 pounds. I repeat, yes, 500 pounds. Think about it. The year has 52 weeks, and every week we look to pull out of the market 500 pounds. Now, you can say everything you want. You can say, that's bollocks. Well, remember, if you don't have an electric car, doesn't mean that Tesla doesn't exist. You don't have it. That's a different story. Now, let's find how we can position you, or what kind of skills you need to develop to get there, shall we? Okay. Hey, Larry, so it's going, man. Tell me more. How's your morning going so far?
Oh, good, mate. So far, I've got up. I've had my coffee. Check this out, Josie. I've actually been for a run this morning. I decided a little while ago that I'm going to get myself fit. So I'm 42 years old, and I've noticed that over the past couple of years, getting fit and staying fit has been harder and harder. But it's because I've lacked consistency. And if you do it all day, every day, you get better at it. And you know what? It's exactly the same in trading as well. A little bit of a mindset for you there.
Yeah, absolutely. Yeah, absolutely.
Yeah, my day's going well so far, mate. My day's going very well.
Lovely to hear that. And exactly as Larry said, you see, he noticed. Okay, so you guys noticed that getting a job with the current economic conditions in the UK has been more difficult. No one can tell me, oh, I just went and got a job. It's not happening. It's not happening. So the conditions are changing. What that means as well is that you have to keep up with times. You have to keep up with times. You have to build a stronger set of skills. You have to do it, okay? So that is this morning call is about. We're going to check on the markets, check different methodologies. So you see exactly what we do and how we do it, shall we? So let's just go back, and we're going to start with, let's just go back to, let's bring the screen. Here we go.
There you go. You got it.
Yeah, that's practice, man. And first, we're going to talk about, just so we can start this section of the London morning call, we're going to talk about H4. This is the methodology. That means that it's very specific what you're going to do, where you're going to do it, and how you are going to do it. That's how things will be for you. You will understand all the way, every single step. This is a breakout methodology based on an 85 pips rotation. And that's the key word, rotation. That's exactly what we have to figure. What is a rotation and how that will serve you well, how that will add value in how you approach the markets. So we're going to jump directly to our MetaTrader 4, and we're going to take a look at one of the different platforms we use. Nothing specific. We execute with different brokers around the world. One of them is FX Pro, and the other one of the favorites we can say, is AvaTrade. Yeah, so AvaTrade is one of them. Now, what we do with this chart, first off, we're looking at H4 right there. You have the Great British Pound versus the US dollar, all right? And basically what we said, based on all the action over there on July 22nd, from the low to the high, you have full 85 pips. This range is about 85 pips. There you go, 85, okay? And the way we use it, we just use it to map. You see, we have different colors. And the reason is because humans, you and me, we're animals, and we're visual animals. So it's not just me talking. I need to share with you, to show you the evidence, the different levels, and see all the colors we have. And how does that help you? Well, it helps you because it allows you to know in advance predetermined levels. I repeat, predetermined levels, all right? Where you know exactly that the pound, the Great British Pound versus the US dollar, that currency, it's going to stop by. Yeah, it's going to stop by. And it will show you where you are, because the most important question, the number one question you need to ask yourself before you do anything is, where's the asset? It's like crossing the street without looking to, turning around or looking left to right or checking if it's a green light or red light. You don't do that, right? You stop. Well, like to think you stop first. Yeah. And then you look to have some of degree of safety, because you don't want a car to just run over you. Well, it's the same before you place a trade. You look left and right, check everything, and then determine, okay, where are we? We're here. Most likely, probability indicates this will happen with the pound. Right now, the pound is in a range in the rotation between 134.08 and 133.18. You can see this to the right there, color. This is the range. And remember, we also work with one thesis that we have been studying for years now. The market has memory. A lot of people like to say, well, financial markets are a casino. Well, it's a big casino, and you may have an opportunity if you apply a methodology, first off. And second of all, it's about understanding that price patterns, they tend to repeat. Now, one thing is price patterns, okay? And one thing is for you to say, oh, I made 10,000 pounds last month. I will make 10,000 pounds again in December and in November. No, that's linear thinking. That's a big no-no. It doesn't work. You can try all you want, but saying something is not going to make it happen. And that's past performance. So if it happened once, not necessarily has to happen again. We like to think that if you follow, right, Larry, if you follow methodology, you can start picking up that consistency that we want you to have in order to potentially, as we say, aim every week to pull out of the market 500 pounds. All right. So, Larry, this is where it is. Today, not much activity. Markets in the U.S. will be closed due to Thanksgiving celebration, right?
See, I didn't know that, Joseph. That was a good point. But we're still in the London session, though, aren't we? So we can still expect some movement, because obviously here in the UK, the guys are still trading down in London.
Yeah, absolutely. And so at least we know the audience, we have this video, they can always review it and see the level. So I'm just gonna, for education purposes, I'm gonna go to the terminal. We have some dummy account simulation money for us to guide you, to show you the execution process, the thinking process, everything that you need to know about this methodology. So right now, like I said, although we're recording, there's not much volatility, not much volume that will impact the markets, mainly because the US will be closed due to Thanksgiving. So the price, you see, it's stagnant. There's not much to say about it, just very slow, very, very slow. Now, days like that, we don't trade, okay? We don't trade because you won't find the conditions for you to take a trade. So what we're going to do is just study a little bit what happened here step by step. And we're going to go all the way back to the last week in October Now, see, Larry, you see the price went deep down to 128.14, right?
Do you see that? Yep.
And then what the price did, the price jumped to the next rotation level. That rotation is between 128.97, see to the right, and then 129.83. Why this idea matters? It's pretty simple. Look, the asset itself is rejecting, is pushing up, okay? It's rejecting this area. And then it's jumping and settles. Let me see if we can take it. There you go, okay? The price, it jumps, bring it back, there. The price comes back, jumps, and stay there. So it finds support where? Above the rotation level.
Yeah.
Okay. The market itself is guiding you. And see, we don't have any fancy indicators in front of a screen. Yeah, we have some lines and everything because we need to determine, we need to share with you where exactly are those levels. That's what we do it. All right. Now, once you figure the price is jumping back above the rotation level, that's your in. That's where you come in and say, okay, let me buy this. And you will use a stop loss. You will measure your risk. Because remember, at all time, this is trading as a business. Sometimes, remember, sometimes in business, you win, sometimes you lose. But you keep going. That's what you have to do. You have to keep going. All right. Now, from this point, where is it going next? Where it's pretty simple. It's gonna head back up to the next level, or at least that will be your target. So, a crucial understanding of these methodologies, pretty simple. It's 85 pips from low to high, and vice versa. Okay. Just added this one. Take this one more time. There you go. Okay. Right there. Yeah, that's what it is. Okay. Every single of these rotations, let me bring the shapes right there.
I love your shapes, mate.
Yeah.
Could have been an artist there, I'm telling you.
Yeah. There you go. So every one of these, look, 1, 2, doesn't matter. And going back to the idea, the thesis, the market has memory. You say it happened there, over here, again, one more time. It keeps repeating. Do you see that, Larry?
Again and again and again, almost like clockwork. I mean, obviously, you're not going to get it right 100% of the time, but as you've pulled into my head so many times, it's a battle plan that you can rely on. It's a roadmap that you can rely on, which is really quite useful when you're trading.
Yeah, exactly. And that's what we want to do. We want to make sure that you visualize this, because it's coming to a point, Larry, and we discussed this. I just need to ask you, where's the price? And then I know, okay, to the higher band, you have this level, the lower band, this level. If it does this, it will go next. So it's intuition based on grasping, understanding that you always have in your mind this battle plan. Now, it's like someone is like a barista, right? The barista at some point in the beginning, when they're preparing coffee, what do? They basically look at, okay, I have to do this, I have to do that. But over time, it looks like instinct, like she or he knows what they have to do, right? How they move their wrist when they're, giving that beautiful draw on your coffee, right?
Oh, and I have my coffee in the morning.
Yeah. So that's what it is exactly. It's the same. As you study more this methodology, you will understand that it will repeat over and over again. And once you grasp that concept, it's powerful, because you finally have a methodology that you can follow to the T.
Do you know?
Go ahead, man.
When we first got started, it was all about muscle memory. And I didn't quite understand that, because for me, muscle memory is when you do something repetitively. Like, so I can touch type. That's something that I learned to do many, many years ago. And for me to do it now, I don't think about it. My muscle just knows how to do it. But when you apply that to trading, I didn't quite grasp what it was you meant.
Yeah.
Now I understand that, like when I come in the morning, so I trade the London Open. When I switch that computer on, I'm quite competent now at looking at where the asset currently is. So this morning I came in, I'll be honest, I've made a bit of a mistake because I didn't appreciate that the New York session wasn't going to happen. I totally forgot about Thanksgiving being here in London. It's no big thing to me.
Yeah.
So I've looked at it and I've looked at what the market's been doing for the past week, really, and it's been trending upwards. So I can see now that it's getting very close to that 134.08 level. I know with a certain degree of certainty, because of what you've just said and the fact that we've got repetition in the markets, that once it crosses that point, I was going to be taking that buy. Now, 3-4 months ago, that was all completely alien to me. But because I've been doing this every single day, it becomes muscle memory. And it takes, like you said as well, right at the start, 45 seconds to come in and assess the market and to be able to place that trade with confidence as well is something that I'm now able to do. And that's thanks to the H4.
Yeah, absolutely. And we talk about it. Let me just pause it and say where I have you. This thing. Jesus, man.
I need to shave.
Yeah.
It's been a tough week.
Yeah, I'm trying to understand how we connect both. That's me. And then I think I said do that. No, I do that. There you go. Yeah. So that's pretty much about H4. It's understanding. So we have the rotation. All right. So you have this level here, the upper level, you have the lower level. And what we look to coach everyone is, okay, the pound is in the middle of the range. Okay. What is your advantage? Mathematical advantage. Where are you heading? What's your risk? Where are you heading? All right.
Yeah.
And it's the constant practice in how you assess where is the asset. In this case, the Great British Pound versus US dollar. So if you, Larry, if you stop, you open your eyes, you pause, and you're like, okay, before I place the trade, left, right.
There you go.
Okay, now we go. Okay. So that's exactly what allows you to have the battle plan, which we share with everyone. We share with everyone what is this. I mean, it baffles me. Yeah, there's coaching programs that we offer. There's a lot of so-called female and male financial gurus, but the vast core of what we do, it has one intention at the end of the day: help you, the one that are listening to us. And yeah, you need to open an account. It's what I said. I said this all the time. Last night, I was 2 a.m. We had a class for America, for South America, Central America, and North America. And I was saying, all you need to be successful in investing and trading is time and capital, or risk capital.
Yeah.
And I said, time. Do you have a trading account? No. Game over. And do you have an investing account? No. And that's it. Well, let me tell you something. Without that, you are going anywhere. You are not going you're not going to somewhere where you can have an opportunity. So, oh, that's not real. Oh, that's fake. Oh, that's a scam. Whatever you're saying, you're right. 100%. You know why? Because you don't have a trading account, my friend. You can't play the game.
If you haven't got the tools of the trade, you're never going to get anywhere. But I mean, let's be honest, though. It's scary. You know, when I first sat down and looked at these charts, and I mean, like I've said to you before, I've obviously been around this market for a little while, being that I do the marketing for it. I was in binary options, which is a bit of a dirty word these days. But, you know, there was a little bit of legitimacy there as well. It is scary when you first pull up a chart and you're like, there's just no way that there's any sort of rhyme or reason to this. It looks completely random. But as you also said, markets have memory. And once you start to understand that, and once you start to be able to apply the H4 methodology and understanding it really is just support and resistance. I know it's a little bit more than that, but understanding that gives you that very clear insight into where that asset, and it's only one asset as well. We don't trade the USD, JPY, the Aussie dollar. It's the Great British Pound USD. And I'm sure you're going to explain why we do that as well. But once you understand how that asset moves, and it just like you just say, it takes time. You sit there, you do it every day for I'd say 6 weeks, and you're going to be in a position where you've got much more insight than your average trader out there, or your average YouTube guru that's giving it just wait for support and resistance, this, that, and the other. So it's a very powerful methodology, but you're absolutely right. You need to have that trading account to begin with, and you need to put your bum in the seat and invest a little bit of your time to start to acquire that skill set.
Absolutely. Now, I'm going to jump and share with the audience a little bit more, because remember, you are the product. You're a product of your 5 closest friends. You heard that one before, right, Larry? So 100%. So I'm going to share now. I'm going to just, we have the screen there. We have this one. Let me there you go. I'm going to share with the audience tools that we use, because we're going to do everything in our hands to allow you to have an opportunity to become profitable, to place with confidence your first trade, to have, like Batman and Robin, that they have the belt with a lot of tools that they use in every different cases that they get in when they get in trouble.
Yeah, really
exactly. Yeah, exactly. So that's exactly what Trade with JR, the team with Trade with JR, it's doing. It's gonna put under your belt. We're gonna set that belt with tools that will allow you to face the challenges that the market will pose. All right. And as you are better prepared, like they say in MMA, train hard, fight easy. Yeah, exactly. It's the same process here. So right now you should be looking at one of the tools from our friend Leonardo Hermoso from Brazil. I think he lives, I have to ask where he's now. I think it's in Sao Paulo. And this is one of the technical tools we use as source data. We're not coming to you to tell you, okay, this methodology is something that, we created it, but it has some sort of sense of mathematical data, and a very important, for us, very important statistical approach. Now, what you see right now is what we call the dashboard. The dashboard is based on volatility. That means that we have more than 10 years, I repeat, 10 years of data here, condensed, coded by Leo. And Leonardo Hermoso coded this in a way that I just have to type this in, all right? And I already know exactly, as you can see, let me see if I can zoom this a bit more. You can see right there for the gray British pound versus the US dollar, we know exactly the expected close price for the month, the bottom band, and the top band. That means we know how high it may go or how low it will be trading at any given time. We know this in advance. We don't predict the future. We take in account the data for the last 10 years. This is coded by Leo Hermoso. Let me see if everyone can see right there. Copyrights to Leo, and thanks to him always for sharing lots of great tools.
Huh? Is that free? Is he just providing that from the goodness of his heart?
Well, yeah, we're sharing that. We are providing it for the good of our heart, from our heart. But yeah, we have a deal with Leo as far as sharing the tools, because the number one idea I want everyone to take from the London call is, yes, we want more people to make money, period. Yeah, we don't need, I say this in Spanish, and so I don't know if I'm going to translate this quote correctly into English, but there's no novelty in being poor.
No, there's not. There's not.
Being poor is an issue. All right, financially poor is an issue. I think even Abraham Lincoln, Abraham was the first president, was George Washington.
Don't know, actually.
No, I think Abraham Lincoln was president of the United States, but he said it, having money, having resources, call it whatever you want, is blessed from God. You're being blessed by God. And we really think, if you choose to be poor, if you choose to be broke, I'm happy for you, because you chose to. But if your current financial condition is not the one you want, then you need to take actions. So
I'll just interject a little bit there. There's a really good saying that I heard. This is from the marketing world. It's from a guy called Ryan Dice. And he said that your current financial situation is nothing more than a lagging indicator. So up until now, the work that you've put in is what's determining the amount of wealth that you have right now. But it can be changed at any time. And today is the best day to do it.
Yeah, absolutely. So as you can see, we have a tool, a mathematical tool coded by a financial programmer. Leo is not a kid. The guy knows what he's doing. And we also have right there, we can get the daily information. Now, we're moving into December. Before it happens, we already know what will take place. This is the expectation. This is what we expect for next month for the pound dollar. This is the daily. To the right, this is the daily volatility. To the left, there's a monthly volatility. And what we have now is that it's not changing much. It's not changing much. We expect a probability close of 130.98. Right now, the pound is trading based on H4. We're in the middle of the range rotation, 85 pip rotation between 134.08 and 133.18. Okay? So we can't deny that if understanding, we said based on that tool, the volatility tool from Leo Hermoso, that we're expecting 130.98. We, at Trade with JR, those of you that are watching us or hearing us after we go live, you know that if you see the pound trading back at 131.20, you should not be surprised.
Do you know what? That little nugget right there is absolute gold for all our viewers. Take note of what this guy's just said, because there's money on the table ready for you to take right now.
Yeah. And of course, once we hit, let me go back. Once we hit that low, that's expected low, if it happens, we will be ready because we will be trading the rotation levels. And that's the beauty. Not for you to wait until it gets there to collect. No, there are levels where you professionally will take as a business owner, because remember, your trading account, your investing account, that's a piece of business. That's your online business. That's your digital footprint in how you conduct business in the foreign exchange market, Forex, or if you're trading US equities, or if you're trading options on US equities. That's a business. You can be an Amazon reseller if you want.
Don't do it.
Yeah.
Don't do it.
You're killing me. You're killing me.
You're paying, trust me. Mr. Bezos is rich for a reason. It's not because he helps the sellers.
Yeah, but Amazon is going to hack us now, man. What are you doing, man?
Sorry. We're sorry, God, Amazon. God, Google, God.
Yeah. So we will be taking profits based on these different levels. We're going to re-enter trades based, again, on market memory. That's what we're going to do. But at all time, remember, we're not here to joke with you. There's no time to mislead anyone. Again, I repeat, there's no novelty in being poor. And if your financial condition right now is not the best, at least come and listen to us Tuesday and Thursday. Well, we're still figuring out the time, but we're working on it. But it will be in the morning.
I think now would be a good time just to mention Trade with JR as well.
Yeah, absolutely. And we have the website ready. We just have to go to it, right?
Yeah. If you can go to Trade with JR right now, that should be set up and live and good to go.
Let's jump to Trade with JR and talk a little bit about it. And as Larry said, beautiful.
Sorry. Just come off this a second. It's the domain's pointing to the wrong place. That's not very professional. I'll get that sorted.
Yeah.
In a second.
Yeah, that's all right.
Ladies and gentlemen, sorry for the technical inconvenience right there. Normally, when you go to Trade with JR, there's the opportunity to enter our monthly One Trade Away challenge, where Josie is personally going to coach you for 5 days on how to implement the H4 strategy. Now, I apologize, that's pointing to the wrong domain at the moment, but I will get that running for the next couple of hours.
That's all right, no worries. We'll work on that. But yeah, so that's available. Continuing with this is just understanding that we have an edge. We always are looking to have the edge on the market, and that comes from the mathematics, understanding the figures. Now, Leo, he keeps working on this. We also have other levels, and we are part of different groups. So we condense all that information for you to have an edge in the game, okay? So one more time, let's look at the levels of H4. And what we expect is pretty simple. If I just move this and look at the price so far and see where we are, let me just bring this right there, okay? You can see, I'm going to take this one out. Let me see how I can put it there. And what I can see this is there's a rejection. Look at this, Larry. Rejection 1, 2, 3, 4, 5 times. 5 times the pound. It's telling you, okay, we don't want the pound to be above 134.08 so far.
Mm-hmm.
So far. Now, it looks bearish. If that's what it is, I play the market in the direction of how the price is telling me what to do. All right. Now, still, we have to be aware of the following, and that's where we're going to end this segment. We have to be aware if the market is taking risk, we may see the pound keep going up. How high? Well, we know right now is we have an opportunity, clearly an opportunity. The market will hit 134.08 and will continue all the way until it hits 134.90. At that time, we will find this huge resistance coming from this long-term. Let me have it there. This long-term external bearish trend line. Why is a bearish external? Because the price is outside the range. This will be inside. This will be outside, right? So this is a bearish because the price is under that trend line. Now this trend line comes, the origin of the trend line is all the way back. You can see right there. We go back to 122.50. That was back on the last week of June of this year.
Seems like such a long time ago. Wow, so much.
It flies. Yeah. See that? All right. So we look at it and we know now, hey, you know what? I can extend it now. So everyone knows we do this live. Ooh, there you go. But that tells me whatever the Great British Pound does, there is a ceiling coming in. At least not too far from 134.60. Hey, and guess what? Look at this. What a coincidence, right? Let me see this. Let me just bring it. That ceiling right there. Oh, there you go. Beautiful, right? That ceiling right there. It will be around 134.50, 134.60. And if you look, you will only have 32 pips away from the next rotation level, which is 134.90. Is that a surprise? Is that a coincidence?
Markets have memory.
I don't think so. And if I look to measure that, to judge that memory, where did I find myself? There you go. You find yourself all the way back to September of this year, first week of September 2020. And what that basically is, the market has memory because we will be trading back at a price of 134.77, which happened back on, I repeat, the first week of September. This is not an accident. The price will just revert back where it was, all right, where it was. And then we will be facing huge resistance, but not just a resistance, a horizontal resistance. This is a resistance coming from all the way from the last week of June. Look at the powerful bearish external resistance. Now, how my analysis will change or my positioning on the pound will change. If the pound finally breaks above, if I see the pound jumping above this, wow, something changed. Are they finally making peace and kissing with the European Union? Is the UK finally settling the score with European Union commissioners?
No, I'm going to be honest. I'm preparing, as most people are in the UK, for a hard Brexit now. I think now that Boris has got in and he's got such a majority in the Parliament,
yeah,
his plan, in my opinion, all along was to go for the hard Brexit. And I think things are going to be a little bit tougher here in the UK. But with everything else that's gone on this year, like Brexit suddenly seems like such a small thing. So I don't actually know how it's going to play out in terms of the market, but I would expect a hard Brexit.
Absolutely. Beautiful. So that's it, what we have for you guys today for our audience. And we're going to close for purposes of editing later, just closing with this slide so everyone sees we talk about today so far. H4, it's a breakout, it's a methodology, okay, based on breakout and an 85 pips rotation. And every Tuesday and Thursday, we will talk more about it during the London morning call here at Trade with JR, or the War Room 1985, or Trading Room brand, and all the different friends that we have around the world that are professional traders that want to share more and more with everyone, because we want you to have an opportunity, a real chance at making money when you trade Forex, especially if you decide to trade Forex as a business. Larry, final words on this segment?
Nope. Everyone in the US, have a happy Thanksgiving. I'm sorry, I forgot that your big old celebration was happening. And thank you for joining in and listening to us.
Yeah, absolutely. Do you want to continue with volume profile for today? And then we...
I'll let you jump on that, mate. I've just got to go do some other stuff next door.
Oh, all right.
I'll be in the background. Just I'm just going to mute myself, okay?
Okay, perfect. Mute yourself. There we go. We're going to continue. Larry's going to take care of some business. We're going to just jump in and just going to move Larry. And let me bring myself. So that was H4. That's our methodology for you to trade Forex as a business. The Great British Pound versus the US dollar. Only one asset. That's all we want. We want you to focus on one asset. Nothing else. Nothing more, nothing else, nothing more. just right there, one asset. What that gives you is your sole focus. Like, listen, people quote all the time Warren Buffett, Bill Gates, and those two guys, they come with one idea. If you want something to happen, you must focus. This, you have to, eye of the tiger, eye of the tiger. You have to really focus, and you will make anything in your life happen. If you do that, will happen. If you don't do it, if you don't focus, if you fool around, come back, trade one day, then come back next week, look at the charts, blah, 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 guess what? It's not going to happen for you. All right? It's about focus. It's about entering in the zone. You need to get in the zone. Of course, if you want to really make money. If you don't want to make money, if you want to be more statistic, another dead body in the millions of accounts that don't make it, well, that's your call. But if you want to be in the selective club of those that actually make money from trading and investing, then what a great way to start your day. Tuesdays and Thursdays, come to the London Morning Call and get your dose of understanding, breakout, mathematics, the mathematical edge when we trade, and above all, H4. All right, now let's jump. Let's talk about TradingView. This is another platform that we use. I'm going to talk about what happened yesterday. I'm going to go side by side with this screen, my screen. And let's take a look yesterday. We have a little bit of a news that Salesforce to buy Slack Communications. Let me look at this. All right, you say Sales is in advanced talks to buy Slack Technologies. There's a couple articles that you can look into that. But how that translated? Now let's talk about U.S. equities. All right. Before I do that, let me just start the segment with our slide. So now let's talk during the morning call, London Morning Call. Let's talk about volume profile. What is that? How it helps you? We're going to talk about the S&P 500, the NASDAQ, the gold in CFD form, XAU, USD, WTI, that's oil, and everything following. We are going to use TradingView. Is a platform. You can have a free access. You can have free access if you want, or in our case, that we need more professional data, then we pay a monthly fee of $29.95. That's what we do because we use a certain tool. Now, using other tools that we, as professional traders, we work with, we have the Hawkeye Volume Pack. The Hawkeye Volume, it's from Randy Lindsay, Anthony Speciale Jr. in the US. There are volume and momentum traders. And what a coincidence that following this tool, this is the daily chart for Slack Technologies, Slack Communications, ticker symbol WORK. We got an entry thanks to Roadkill. Roadkill is like that little thing that says, hey, buy, hey, sell. And right there on this candle, let me show daily candle on November 20, we actually got a buy guided from Hawkeye Traders, the Roadkill. That was at $28.24 per share. Whereas as it closed yesterday, $40. Oh my God. $40, right there. That's a 43% increase in the price of Slack Technologies. Now, it's not a secret. It's not a secret that the reason why it went up so much yesterday is because of the announcement or the leaking on the press, on the media, that Salesforce is actually buying this thing, or at least they are bidding heavily to it. But on the 20th, you got a signal from the volume and momentum tool, the Hawkeye Traders tool, Roadkill. It gave you a signal. Now imagine where you will be. Now let me show you what happened in the options market yesterday for that particular company. And we're going to look at the most active contracts in the US when it comes to options. And of course, because the market went up, we absolutely have to look at call options. Take a look at Slack Technologies. And let's take a look who we're making yesterday. Where's this thing now? Option chain. Okay. There you go. All right. Now go to most actives. This is NASDAQ.com. This is the site. Yes. From the exchange. And look at it. This is the kind of money people made yesterday. Look at this call, the November 38 call, right? 15,000%. Look at this call, November 27, November 27, that means expiration tomorrow, Friday. Look at the strike. Strike $37. Someone made 39%, 39,000%. Look at these sick returns. Look at this one. November 27 call, strike was $40. Look at that change. 16,000%. 16,000%. That's kind of the money that you can make in US markets. Let's take a look at this. Let's go to the 37. Okay. Look at it. Right. So the market was saying basically that this November contract that expires tomorrow, Friday, this company, Work, ticker symbol WORK, sells Slack Technologies, will be somewhere around $37. So what happened is that the previous close was 1 cent. There was no probability for this to happen. And then where it opened at 2 cents. So still in the first half an hour of the market opening, you still can buy this one at 2 cents. By the time the news got in, ciao. Let's take a look where we can see this, how it happened. Let me go to quote me that provides all the data for this, guys. Just gonna let me add the ticker symbol WORK, Slack Technologies. All right, and let's go to options. The company yesterday went up. Work Technology, Work up yesterday 37%, 37.59% on the daily bar. All right, let me go back to this one to track. We're studying the 37 call, this one right there. Okay. All right, see this. This November 20. Let me go back. Has to be November 27. Okay, let me go back one. Let me go back two. Where's this page? Okay, 27. So we take this one out with this one, and we'll look for the 37 strike. There you go. Let's take a look at what happened. 39,000%. So the market opens. Let's take a look. The market opened, nothing, and then it spiked. It spiked all the way from 2 cents to $3.50. Okay? Let's take a look at this, analyze it a little bit better. The timing and how this thing happened. This. You open, you buy it, and then it spiked all the way to $3.50 from 2 cents. Then it crashed. It crashed, wailed under $1. And then from 50 cents, estimated probably 80 cents, 60 cents, it ended the day at $4. That's at least 400, well, probably 300% on your money. That's what it means. 300% on your money. Is that something you're going to say no to? But that's just paying attention and having the time. The time means for you to have your trading account, your investing account ready to go. And when the option collapsed, then ka-ching. That's understanding the news. That's understanding how this will impact with a positive angle the price of the stock. That's powerful, guys. That's really powerful. Let's take a look now. We're going to look into what is doing the S&P 500 via SPY. This is the ETF in the US. And we're going to take a look and see if we can have some sort of edge, understanding how price is behaving. We're looking at the daily chart now and just going to take a look at what is the SPY doing. We got a couple buy signals that are working very well for Hawkeye traders. And we definitely see that push about the 360 range. We have a double bottom this area. You can see it. This is not a surprise. And we have a continuation. Now, as we break these, let me just bring that. As we break neckline, all these previous resistance coming from the first week of September around 357, we totally have an opportunity now to have a duplication of this area. That duplication, if we take a look at it, see this, pretty simple. That's 12%. That's 38 points. 38 points will probably take us all the way to almost 38 points will take us all the way up to final target will be 390, 400 points for the SPY, which is the S&P 500 ETF. That means that these particular ticker tracks the behavior of the financial index, the equity index. And that's very important because you have a way to trade if you buy the ETF to have less risk by exposing less capital from the get-go, all right? And you don't use any leverage that you use when you trade futures market. So that is for the SPY. Now let's take a look at the triple Q. This is the ETF exchange traded fund that tracks what is happening with the underlying asset. What is the underlying asset? In this case, that is the NASDAQ, the tech giant. That's the tech giant in the US. Everything that has to do with technology, you will find it trading in the NASDAQ. Now, same story we have on the daily chart. We have a little bit of an entry, a bullish entry coming from roadkill, and that gives me confidence. So I would just draw a line. It's pretty simple. You don't have to have these fancy indicators. I'm just trading and approaching the markets from the perspective of volume and momentum. And that's how I'm using these tools. Now, I'm going to add volume profile to the right, and I can see that previously we had, this is the blue histogram to the right, we had a lot of support coming in at this 257, 250 level for the triple Q. Now, look at this. We're back. There's build up momentum, build up volume, which gives me confidence that this is not just another fake out. There is a strong evidence. We had an opportunity to break this level, the 299 level for the triple Q. And if that happens, I'm just going to do the same I'm been doing with SPY. I'm just going to duplicate that range. And you have two options. You have one option that will be the first one. That neck will be about 45 points for triple Q. And you have another one that will be 38. I like to be conservative. Okay, I like to be conservative, so I will say I will take the smaller one, smaller neck, and that projection, 38 points, will take me all the way up to 344. That's right, that will be a new all-time high for this ETF. And is that a surprise? Of course, it's not a surprise. Look, UBS calculated that is an estimated. Let me just see if I see I can come back. Be side by side. According to UBS, United Bank of Switzerland, there's about $4 trillion outside of the markets. And remember, in the age of low, close to negative, at least in Switzerland and Denmark, negative interest rate in banking, where do you think that money will go? My friends, it's going to be poured into the markets, into financial markets. Money has to find returns. People need to find returns on their money, not to be punished. Paying to the bank. The bank was supposed to pay you. Fine. They don't want to do what they're supposed to do. They no longer play that role in our society. Fine. So you have to move that money, that pot of money, $4 trillion. It's not me, JR, talking about it. It's UBS. So don't believe me. Believe them, please. And that's just what they think. It can be more, a lot more. And that all has to go and find returns. That will just go to the markets, especially U.S. markets, because they are the most liquid and they have the best regulation to protect you, the investor and the trader. All right. So that's what I want you to think, because that money has to be somewhere. So understanding what is happening with the ETF If you are not an aggressive investor, if you are somewhat new to the game, and you want take baby steps, you look into the ETF world. No leverage like it happens in futures. You can start with small amounts. You can start with 2,000 pounds right now. I already have to talk to Larry. We found a broker that will give you access to premium technology, very simple interface, platform, web application, but they will start taking accounts starting at 2,000 pounds, for example. You might say, oh, well, that's more realistic. I mean, some of you will start trading, investing with 10,000 pounds. That's in cases when we have people starting with 50,000 pounds. That's fine. But you no longer have excuses not to start trading. There is an opportunity out there, right? So continuing, let me go back and bring my screen. That's what I have as far as the cues. Now, we talk about gold because gold is getting hammered a little bit now. And the reason gold is not performing as those gold bugs think is simply, remember, gold pays no dividend. You cannot eat gold. Can you eat a soup of gold? I mean, probably you can eat in a bowl made of gold. You can't really eat gold, can you? No, you can't. So what is happening now, gold is going to after a strong 2020, because we cannot deny that thing had a beautiful 2020. That means it made money to a lot of people, like a lot, okay? But what is happening now, remember, all assets, and I'm going to explain this now, all assets, they need to look for a pattern, okay? The way this patterns works is this, okay? Follow me. So let me bring the brush, okay? So the way the pattern works is the asset starts going up, but the market has to be efficient. That means the market has to allow you to think you're smart, and you're a beautiful thing. But please, so the market knows that. The market has to let you know that you're smart and let you think there's a better opportunity. And it is, because the market is going to need your money to go up. It needs liquidity, okay? So the market, as it is going to let you come in with your money. And it has to pause. It has to take a break. And if it keeps going up, the market knows you will never dare to invest a penny. You won't do it. You just won't do it. So it pauses. Okay. When it does that, okay, then the market says people will see this as an opportunity. This is what we call the dip, the pullback. Let me write it down. This is the dip, pullback, right? Now everyone is like, okay, now it has a lower price, because that's the way we talk, right? It has a lower price. This is my opportunity. This is my opportunity. And then the market continues after giving you that opportunity. That's what it does. That's the way it behaves. And after that, then the market continues. So where do we are right now? That's the pause. That right there is the pause. Gold has to pause. If anyone is expecting gold to go higher, and I have a target of 2,800 by 2022, gold will be trading at $2,800 per ounce. It has to do it. All right. So before we get there, it needs to pause. It has to do that. It has to give us the opportunity to participate in the long-term movement. So it can come here around back to 1,500, and still it's a great opportunity. Now, where I will change my view if gold by any chance drops all the way to $1,200. If it comes to $1,200, then I'll start thinking something went a little bit wrong there. But keep in mind, right now, gold selling on any rallies. If I see any rallies, I'll start selling gold, taking my money, going against gold, not because I think the US dollar is a better place. No, it's just simply because gold has to go through its phase of dipping, pulling back. And a lot of people at the end of the year, they are taking all the profits off the table. thinking all the profits off the table. All right. Now let's take a look and finally close with WTI. We're going to look at gold, and we're going to look at the CFD version of oil. And we are trading so far, we're trading at $45.20. Now, what I like to see here, it's moving from the long-term view. Let me go to the daily view, and I like to see what is volume profile telling me about this thing. Now we have a strong support at what we call the point of control. This is this red horizontal dot line. We had a few entries right there. Look at the dot, the green dot coming from Roadkill, the Hawkeye Traders volume and momentum tools. We have that entry, beautiful entry, November 20, boom. And now oil via the CFD, which is what we trade, a lot of people trade in Europe. On the 20, we have that confirmation. And now oil, WTI is up $4, $4, 10%. Imagine that opportunity. And all you have to do is follow one of the tools that we use at Trade with JR and our team uses is Roadkill. We have that big green dot right there. Incoming. Boom. And there you go, $4 up. $4 up for gold. Okay. I'm going to share with you, for example, let me just take a look at how much that will be in a day-to-day account. Let's take a look at the daily chart. Let me clean all this. And for example, if you were trading on account like this, with only one standard lot and it moves $4 in your direction, right there, $4. That will be about roughly a 3,000 pound, a 3,401, a 3,000 pound profit. Now, I mean, it went up. I'm just using this to give you an idea what it will be worth with your money. Okay. Now the risk, usually we can use a $1 and risk that would be 800 pounds. If you want to have more flexibility, you probably say you want to have a $1.50. So that gives you a risk of about 1,200 pounds. 1,200 pounds to make, if you go for $4, you make 3,000 pounds. That's a 2-to-1 risk reward ratio. That's a profit trade right there. Right there. Now, okay, remember, I'm just using this to give you an idea of the risk and potential reward following this entry that we got on November 20 with Roadkill. Look at that big green dot and boom, we buy. And right there, 10% up on the asset. All righty? Okay, and I think that's it for today, Larry. How's it going, man?
Sorry, I was just muted in the background there.
That's all right.
Type stuff. So can I just ask, obviously I'm still learning, I'm focused on Forex at the moment. I didn't realize there was all this other opportunity as well.
Yeah.
So with the broker that I'm using at the moment, AvaTrade, have I got the ability to go in, set my MT4 up to start trading other assets like gold and oil, and literally just use TradingView as an indicator, and then place those trades, but treat it the same way I would do with Forex, where I'm using either one standard lot, half a standard lot, and still make those sorts of gains? How does that work?
Yeah, I mean, absolutely. We can always, and the way we have the setup right now, some people do execute via TradingView because they have their accounts connected. But what we do is that we use it only to follow, for example, Hawkeye Traders volume profile, those two indicators, right? We do a little bit of analysis there for education purposes, the dual screen that, I use a lot. But we use it to find those opportunities via Roadkill. We have TradingView open, we get the signal, we go ahead and execute. For example, we execute a lot with AvaTrade, but we execute with a global structure, which is from the Chilean company, the one that is in Santiago, in South America. You have the opportunity right now to trade the CFDs on oil, gold, and also there are some CFDs on US stocks. So you can actually trade CFDs on US stocks from your account with AvaTrade. Not all of them, right? Not all of them, but you can. So it gives you a lot of flexibility because like that signal that we get from Roadkill back on November 20, that's a powerful signal. Look at that, 10% appreciation in the next days. In about what, 6 days?
Yeah.
For you to take a trade where you risk, like I said, you can risk 800 pounds. I mean, I rather have more flexibility and have a risk of 1,200 pounds and then go for the kill, go for 3,000 pounds.
Yeah.
Now, a lot of people think like, oh, if I have a tight stop, it's easier, it's better for me. That's just a myth. There's no relation between if your stop is tight that you think that, oh, you will lose less. No, you need to have something that it has to be logical. If you're looking for something like 4,000 pounds, yeah, you can have a little bit more risk because it's a business. You cannot, like, let's say, you can always be tight on money to run your business. You need to have, always like that backup in case something happens, right? And that's what we're looking. But absolutely, we like to execute with AvaTrade, the global entity, and that gives you a lot of flexibility and good leverage.
I didn't realize that was available to me. Now, to be fair, I'm going to stick with Forex because I do believe you master one thing before moving on to the next.
Absolutely.
And all that is available to me as well. And you've got such powerful indicators that will give us those insights. It's a bit of an eye-opener, Jose. So I'm absolutely enjoying my education with you. It's good stuff.
Yeah, good stuff, mate.
Thank you for sharing.
Yeah, you're welcome, man. So thank you, guys. This has been great. Another session, another London morning. We're going to come back later. We're going to come back with our podcast, Freaky Profits with the Pound, where we just go about rant and talking about the pound, how much we love the pound, and everything that you can do with the pound to the left, pound to the right. But the Great British Pound is a great currency, man. I don't know why people don't get it, man.
I love it. I love it. Obviously, I live here, and I love the Great Scottish Pound as well because I'm up here.
Yeah, that's true, man.
But no, I'm looking forward to doing that session with you, Jose. Let's tie this one up and get back for the next one. I might have a shave as well. I'm looking a bit rough.
Perfect, man. So thank you, guys. Thank you so much. Remember, every Tuesday and Thursday, the London Morning Call. This is our trade room. It's called the War Room 1985. Wow. And War Room, man. And it's going to be Larry Apka directly from Edinburgh. I myself, JR, directly from somewhere in the mountains in Zagreb, Croatia. We're going to bring you the best of the markets. We're just not going to talk about news. We're going to talk about things you can do, execute to improve your results. And that only means make more money. That's all it is. We're going to talk about H4. We're going to talk about volume profile, Hawkeye traders, roadkill, what assets are prime, ready to rip for profits, and anything else that you guys, obviously, in the description of the video, well, the comment section or emails we get, we're going to talk about it. So get ready. There's more to come. I see you guys when I see you. See you next week.
Good.